I would waive all risk diversification arguments. I would put the 500 million into one single asset. So, I mean, I know some which are worth more than that. So maybe the 500 million won't be enough at all. So
we'll leverage to $1 billion for you.
Yeah,
that's
right. So 50%, I think that's feasible now, isn't it? So no, my strong recommendation would really be to go for the big shopping centers, the real dominant super regional schemes in major cities in Europe. That would be my advice.
Okay, good. Thank you, Chris.
Well, that means I have to diversify, doesn't it?
No, you can.
Earn more money on that as well.
Yeah, I think I agree with Henrike's big cities and that dominance, and for that reason, I would look at some high street retail in the prime, super prime city locations. Whilst the yields are very low, the growth rates are incredibly attractive over a long period of time. So if you have a 10-year plus hold, you can see real returns in that sector off relatively low yields. Secondary shopping centres, I think it will be no surprise that I would push that, given a number of my comments on the panel today, but maybe in some more surprising regions, maybe looking away from some of the safer havens of Germany and Poland, and maybe being a little bit more daring to go up the risk curve and move towards Italy, and maybe even start reviewing Spain, as a number of big key investors are. So I think secondary shopping centres, dominant, and high street retail.
Good, thank you. Herman.
Well, 500 million. I've never had that amount in my bank account, and I think I will never have it. But it's, you know, of course, investment-wise, it's not the biggest sum of money. So you have to think carefully on what to do with it. I think also market-wise, I would most probably move a little bit away, let's say, from the most, from the strongest safe havens, and with that also the most expensive markets. I think in terms of portfolio, I would, you know, you want to diversify a little bit. You want to have maybe a little portfolio, some scale. So I would move, let's say, towards mid-sized cities and then shopping centers, which are dominant in their catchment area. So convenience, let's say 5-minute drive time, and let's say dominant shopping center, let's say the whole city. And I would try to concentrate that, let's say, a little bit in an economically strong, diverse region, so that you also, in terms of portfolio, marketing, branding, leasing, that you can get a little bit economies of scale, and you can play with that portfolio also to upgrade the portfolio and further improve it. I think that's
great. Thank you. Last but not least, Thilo, what would you do with my money?
I would put half of the money into the markets that I know best, which is German retail warehousing. 40% I would put into anti-cyclical investments, where I think a lot of money can be made, and that would be high street in Milan, Rome, Madrid and Barcelona, where you can pick up great yields on great buildings, but really prime high streets. And the last 10% I would gamble in Turkey.
Excellent. Thank you very much for coming, and thank you very much to the panel. Thank you.